Money makes the world go round, or so they say. But have you ever wondered if there's more to the story? Beyond the glossy advertisements and friendly tellers, there are some secrets that banks would prefer to keep hidden. In this video, we'll unveil 3 truths about money that banks don't want you to know. So, buckle up because we're about to embark on a revealing journey into the shady side of the banking world. Welcome to Blue Chip Mindset, the winning mindset for success. This channel isn't for the lazy, so if you're not here to get inspired, you're in the wrong place. Without further ado, let's dive into the video, and if you enjoy it or learn something new, please give it a like, and nothing I say is financial advice. Truth number 1, your money isn't just sitting there. You might think that when you deposit your money in a bank, it's safely tucked away in a secure vault, but the reality is quite different. Your money is put to work by the bank in ways that often go unnoticed by the average customer. Banks engage in a practice called fractional reserve banking, which allows them to lend out a significant portion of the funds they receive. Let's say you deposit $1,000 into your savings account. The bank is only required to hold a fraction of that amount in reserve, typically around 10%. This means the bank can lend out $900 of your money to someone else while keeping just $100 on hand. The borrowers are charged interest on the loan, and this is where the bank makes its profits. The interest rates banks charge borrowers are often significantly higher than what they offer on deposits, leaving you with meager returns. While you may receive a paltry interest rate of 0.01% on your savings, the borrower could be paying double-digit interest on the loan. It's a lopsided system that benefits the banks at the expense of the average customer. To put it in perspective, imagine you deposit $10,000 into a savings account with a 0.05% interest rate. After a year, you'll have earned a meager $5 in interest. Meanwhile, the bank could have lent out that same $10,000 and made hundreds or even thousands of dollars in interest from the borrower. This discrepancy between what the bank earns and what you receive may leave you feeling shortchanged. But wait, it gets even more interesting. The money the bank lends out doesn't necessarily come from other customers' deposits. In fact, banks have the power to create money out of thin air through a process called credit creation. When a bank makes a loan, it creates a digital entry in the borrower's account, effectively increasing the money supply. This means that banks can lend out money they don't actually have, relying on the belief that not all customers will withdraw their deposits simultaneously. This practice of fractional reserve banking and credit creation allows banks to expand the money supply, stimulate economic growth, and profit handsomely. However, it also exposes the inherent risks in the banking system. Suppose too many customers were to suddenly withdraw their deposits. In that case, the bank may face a liquidity crisis, as it would struggle to meet the demands for cash. This is why banks employ risk management strategies and rely on the financial system's stability to keep things running smoothly. However, as you can see from all the major bank collapses lately, this doesn't always work. So, the next time you make a deposit at your bank, remember that your money isn't just sitting there idly. It's being put to work, generating profits for the bank while leaving you with minimal returns. Real quick, if you're enjoying the video so far, please do me a huge favor and tap that like button and subscribe to the channel. I'd love to have you aboard. Truth number 2, fees, and more fees. That's the name of the game when it comes to banks. While they may present themselves as friendly financial institutions, they have a knack for finding creative ways to extract money from your pockets. From the moment you open an account, the fee frenzy begins. Let's start with a classic monthly maintenance fee. Banks often charge a reoccurring fee for the privilege of keeping your money with them. It's like paying rent for your own money. And don't be fooled by the term maintenance. It's not as if your cash requires oil changes or tune-ups. But that's just the tip of the iceberg. Overdraft fees are a notorious favorite of banks. Accidentally spend more money than you have in your account? Brace yourself for an overdraft fee. It's as if the bank is saying, hey, you made a tiny mistake, so let us punish you by taking even more of your hard-earned cash. And let's not forget about those ATM fees. Need to withdraw some cash? Be prepared to face a fee if you dare to use an ATM that doesn't belong to your bank. It's like paying a toll just to access your own money. Sometimes it feels like the banks have a secret competition to see who can charge the highest ATM fees. To add insult to injury, there are other sneaky fees that banks can spring on you. Want to close your account? That'll be a closing fee, please. Need to wire money to another bank? Get ready for a wire transfer fee. Oh, and did you think you were safe from fees when using online banking? Think again. Some banks even charge fees for services as basic as checking your account balance online. These fees can add up quickly, leaving you scratching your head and wondering if it's your bank or a black hole that's devouring your money. It's a wonder they haven't come up with a fee for breathing while standing inside a bank branch. In this fee-ridden world, alternative financial institutions that prioritize customer-friendly practices are worth considering. Credit unions, for example, often have lower fees and better interest rates compared to traditional banks. Online banks and fintech companies may also provide fee-free or low-fee banking options that can save you significant money over time. Truth number 3, Big Brother is always watching. In a world where personal data is a valuable currency, it's no surprise that your financial privacy is compromised when you entrust your money to a bank. While banks must comply with regulatory measures aimed at combating money laundering and illicit activities, the level of surveillance they impose can feel intrusive. Banks are required to report large transactions and suspicious activities to government authorities. This means that every significant movement of your money is being monitored and scrutinized. Whether it's a sizable deposit, a large withdrawal, or a series of transactions that raise suspicion, the watchful eye of Big Brother is always present. The intention behind these regulations is to ensure the financial system's integrity and prevent criminal activities such as tax evasion. However, this surveillance often extends beyond the scope of these illicit activities, and innocent individuals can find themselves under scrutiny. The notion of keeping your money under the mattress suddenly seems tempting, doesn't it? But before you start doing that, it's essential to consider the risks and limitations of such an approach. While hiding your money at home may provide a sense of privacy, it comes with its own set of challenges and risks. Firstly, there's the issue of security. Keeping large sums of cash at home makes you a potential target for theft, burglary, or the risk of losing it all if a fire breaks out. Additionally, the value of cash will depreciate over time due to inflation. In contrast, banks offer security, insurance, and convenience that cash cannot match. That being said, it's crucial to strike a balance between privacy and convenience. If financial privacy is a priority for you, there are alternative options worth exploring. For instance, digital currencies like Bitcoin offer a decentralized form of transaction, providing a degree of privacy. However, it's essential to understand the associated risks and volatility of cryptocurrencies before diving in, as you could just as quickly get rich overnight as you could have to sell a kidney to make next month's rent because you lost everything in crypto. Furthermore, there are steps you can take to enhance your financial privacy within the banking system. You can maintain multiple accounts across different banks to distribute your transactions and minimize the concentration of your financial activities in a single institution. Additionally, familiarize yourself with the privacy policies of your chosen bank and consider opting for institutions that prioritize customer privacy and data protection. In conclusion, while banks may hide certain truths about money, knowing the hidden realities is important. From using deposited funds to generate profits, to the excessive fees and lack of financial privacy, exploring alternative options and taking steps to enhance privacy within the banking system can lead to a more customer-friendly and financially rewarding experience. I hope you enjoyed the video or learned something new. If so, then please give it a like, subscribe to the channel, and turn on all notifications to get notified anytime we drop a new video. And as always, thanks for watching.